Debt finance. So, what is debt finance? Basically, the cash which you acquire to maintain or run your business is known as debt finance. Debt finance does not provide ownership control to the moneylender. The borrower must repay the principal amount along with the agreed-upon interest rate. Mostly, the interest rate is determined based on the loan amount, duration, the purpose for borrowing the specific type of finance, and inflation rate. Debt finance can be classified into three types: short-term, medium-term, and long-term. Short-term debt finance. Loans generally needed for a period of more than 1 to 180 days is called short-term debt finance. These loans are borrowed for covering the shortage of finance and temporary or occasional requirements. Short-term finance is basically required for daily business activities such as paying wages to the staffs or getting raw materials. The amount of getting a short-term loan is dependent mostly on the other sources of income for repaying. The lines of credit from the business's suppliers are the most common forms of short-term debt finance. Trade credit, credit cards, bill discounting, bank overdraft, working capital loans, small business loans, short-term loans from retail banks, and advances from customers are some other forms of short-term finance. Medium-term debt finance. Loans generally required for a period of more than 180 to 365 days is called medium-term debt finance. The way of utilizing the funds are mostly dependent on the type of business. The businesses generally repay the loan from the sources of cash flow of the businesses. Businesses choose this type of finance to purchase equipment, fixed assets, and the like. Sometimes small business owners or startups use medium-term debt finance for fulfilling the funds rotation. Because new businesses must pay beforehand to suppliers for every required good such as buying equipment, machinery, inventories, and the like. Hire purchase finance, lease finance, medium-term credits from commercial banks, and issue of bonds or debentures are some examples of medium-term debt finance. Long-term debt finance. Loans generally required for a period of more than 365 days is called long-term debt finance. This type of finance is mostly needed for buying plant, land, restructuring offices or buildings, etc. for a business. Long-term finance has a better interest rate than short-term finance. This debt finance usually has a repayment duration of 5, 10, or 20 years. Car loans or home loans are two popular examples of long-term finance. Issue of bonds or debentures, issue of preference shares, issue of equity shares, long-term loans from government, financial services institutions or investment banks, venture funding or funds from investors are other examples of long-term debt finance.